Hi guys, welcome back to this moving average course. Josephat Bless here, and I'll be taking you through candlestick patterns today. Today we're going to be discussing about very key candlestick patterns that will help you to be profitable on the forex market. All right, so without wasting more time, let's get to it. Candlesticks. All right, so this is a basic definition of a candlestick. All right, so all you need to know, all right, to read the charts using candlesticks are here. So we have the bullish and the bearish candles. All right, and before I explain this, let me just take you to the charts. All right, let's take a good look at the charts. So what do you see here? What do you see here? Just green and red candles, green and red candles, green and red candles. So I'm going to teach you today how to read this. That's what I'm going to teach you today. All right, basically how to read each and every one of these candles, and then to understand how they could help you to be profitable on the market. So we can see here the bullish candle, like you just said, the green ones, they usually signify that the market is going up, and the red ones signify the market is moving bearish in a downward or in a sell trend. So you can see that this is the open, this is what we call the open of the bullish candle, and this is the close. This is the open of the bearish candle, and this is the close. It's just like you're buying, for example, a gaming console, or whatever it is, a product. All right, and you want to buy it at the lower price and then sell it at the higher price. All right, and then if the price of that particular product was to come down, it's going to leave, of course, a very high price and then to a lower price. Do you get? And that's how it works. All right, just a basic definition to to just explain this to you guys. All right, so when you see bullish candles, it indicates that the market is moving in an uptrend. When you see bearish ones, it indicates that the market is moving in a downtrend. So these sticks that you see here are known as the wicks of the candle, and the shaded area of the candle is known as the body of the candle. So this is the body of this candle, and this is the body of this candle. This is the high of the candle, this is the high of the candle, this is low, this is low. So just that the open and closes are different, because this is a buying, this is a bullish candle, indicates buyers in the market, the presence of buyers in the market, the influence, I would say, of buyers in the market, and then the bearish candle indicates the influence of sellers on the market. So let's move on, guys. So just a basic definition, candlestick patterns are a form of charting analysis used by traders to identify potential reversal and trading opportunities. This is based on an historical price data. All right, so we use previous price data excuse me, to identify potential reversal or trading opportunities on the forex market. Well, don't worry, we're going to be dealing with few of these candlestick patterns, only just three. Why three? Because these are the three candlestick patterns that will really help you to be profitable using moving averages. All right, and I would like you to take notes if possible and listen very pay close attention, all right, as we speak about or discuss about these three candlestick patterns, because they could literally change your life. All right, so before getting to that, we have the risk warning. Pause this content, take a good look at this, all right, ensure you fully understand it before proceeding. All right, these are risk warning, super important, and go through it. So this is, for example, just a little example of the results that this three candlestick patterns could give you, all right, to help your account with. So we have 260 pips. You can see here something happened at this a point, a particular candle formed to tell us that, just to indicate to us that, oh, market is about to trend, is about to reverse in its the retracement is about to end. I'm about to have another impulse, and same thing here, boom, you see came and then boom, 170 pips, and it continues and on and on and on. All right, just by knowing, just think about this, just by knowing a few group of candlestick patterns, you're able to trail all this. Look at this, man, 500 pips, 769 pips, 610 pips, 400 pips at each and every one of these points. And you can notice that there's little to almost no drawdowns, right? Of course, there will be drawdowns at times, all right, but when you follow these candlestick patterns to the letter with the rules that we'll be using, you really make a lot of the market in terms of profitability. So let's get on to it, guys. So this is the first group of these candlestick patterns. We have the hammer, which indicates the reversal of a downtrend. So you mostly see this at the low of a trend to indicate that there's an uptrend coming up, and boom, after it formed, you should have a bullish momentum. So we have the inverted hammer, which also takes the inverted shape of a hammer, sorry, and then also indicates the reversal of a downtrend. All right, so the opposite of the hammer is the shooting star. All right, so it shoots the price down. So you notice this at the top of a trend. All right, and it signifies a reversal of a bullish trend into a bearish trend. So just a short note here, guys, both the hammer and the inverted hammer, that is this and this, all right, indicate the reversal of a downtrend. So you want to see this at the low of a trend, all right, and they usually signify a bullish trend. That means a bearish trend is changing into a bullish trend. Then this shooting star pattern indicates the reversal of an uptrend. That is, you would see this at the high of a trend. The market trends up, you see the shooting star, and then boom, indicates that there is a reversal. So that's where you see this pattern. So we'll take some live examples of this. So I'll show you how they are actually affecting markets real time. All right, super important. So this is the second group. We have the bullish engulfing and the bearish engulfing. So when you see the bullish engulfing, it's usually that the body of the bullish candle swallows the body of the bearish candle. All right, and same thing the opposites. The body of the bearish candle swallows the body of the bullish candle. So what the bullish engulfing insinuates is that there's going to be a reversal of the bearish trend. All right, so it signifies the influence of buyers on the market, all right, to an uptrend. And same thing similarly for the bearish engulfing, that there's a downtrend. So both the bullish and bearish engulfing patterns indicate the reversal of a trend. Super important. Lastly, we have spinning tops, or some people like to call them dojis, right? So they usually signify that buyers and sellers have the same influence on the market, that the market is in a null position, all right, not no bullish, no bearish, all right. So that's exactly what this signifies. All right, so let's get to the chart for some example, guys. So you see, like I told you, we have the wicks. This is the body of the bearish candle, and then this is the body of the bullish candle. So when it forms, you can see that it opened here, boom, went up. Or I think we should use this example instead. All right, so you can see the when the red candle forms, it means that the market is going down, right? And then the green candle forms, the market is going up. So look at this, for example. You have the wicks, which are the, like I said, after the body you should have wicks, or some candles don't even have wicks. All right, just it shows that there's a lot of influence of, for example, here you could see there's a lot of influence of sellers on the market. Once it closed here, boom, it opened here, and then we had a nice bearish continuation of this particular price. So you can see here that there are bullish and bearish candles. You could now relate to what's actually going on to the market. So let's get on to more serious things, guys. You could see here, observe from where you can see from your end, that each time that the market interacted with the moving average, there was a reversal, but something happened. Look at this. There's a particular candle that signified that reversal. Let's zoom in a bit. Look at this. Market came here, there was a reversal, but this particular candle was the first candle that caused the reversal. You can see that, boom, something happened. 100 pips, came back to retest again, then something happened. 115 pips, there was this candle. All right, same thing, broke off, came to retest, then something happened. All right, we have 95 pips happen. All right, same thing here, same thing here, and so on. All right, and so on. 198 pips. All right, same thing here. There are key candlestick patterns that we just discussed. If you look very well here, you can see that this is an inverted hammer. All right, let's take a look at this, guys. This is an inverted hammer we have here, this particular bullish candle. Come here, you see that we have a bullish engulfing candle. Can you see this? It engulfed, it swallowed the bearish candle, and then boom, what do you have from there? 100 pips plus. All right, I don't usually take the whole thing. You can see, also observe here that we have, what do we have? Okay, I think this is a nice example. You have the doji here. Can you see indecision candle to show you the spinning top, as you may call it? All right, to show that buyers and sellers are the same influence, and all of a sudden there was a hammer, sorry, and then what happened after the hammer? Boom, 84 pips. All right, and that same thing continues and so on. Look at this. This is a bearish engulfing candle, or some people even want to call it the hammer. All right, but you can see that the body of the bearish candle engulfed that of the bullish candle. So I prefer to refer to it as a bearish engulfing. And what happened after that? Boom, 200 pips. All right, look here. You can see, okay, we don't have one of our candles there. You can see here we have an inverted hammer here after it forms fire point, just a little drawdown of about 8 pips, then boom, we have 168 pips. That's to show you that these candlestick patterns are super efficient. And how this can also help you is this: take some time out, get to the charts, all right, and just identify 5 or 3 of each and every one of these candlestick patterns that we discussed, starting off these 3 candlestick patterns. All right, so you can 3 of the candle, identify 3 of the inverted hammer, 3 of the hammer, and 3 of the shooting star. All right, same thing with the bullish engulfing and bearish engulfing. You know where to find them. The spinning tops as well, you know where to find them and how this can also help you. All right, so thank you very much for following us in this content. Hope you have an amazing day.